Topic today we are discussing is mutual fund. So why we need to invest in mutual fund? Basically what happens when we invest in a single stock, chances are there that company may not perform well, and we lose our wealth. So when we invest in mutual fund, uh, there are a number of stocks in that fund, so we tend to protect our wealth by mitigating the risk, by lessening the risk. So that's how we protect our wealth. The second point is, what are the advantages? The other advantages in the mutual fund are like, uh, those skilled professionals have got technology with them. So technology, as we all know, like there are thousands of stocks in the stock market. So when we take a decision to invest in a particular stock, we may not have that enough technology. So many parameters are judged, so many stocks are compared, and then we take a conscious decision. So it may happen like, we tend to miss the opportunity uh, in investing in some stocks which we do not have enough time to look at. So mutual fund people are basically technology driven. They have so many stocks into their systems, which they can easily compare and take the conscious decision. Then what are the kinds of mutual funds? So there are open-ended schemes, closed-ended. Open-ended is something in which we can withdraw our money. It is, in terms of mutual fund, it is redeem. So we can redeem the money at any point of time. While in closed-ended, we have to wait till the duration that they have mentioned. So that is the difference. And the next point is, there are equity driven and debt driven mutual funds. So equity is something in which we invest in companies, while debt is something, so it is like we're paying, uh, we're giving money to the companies. The company every month pays us the interest. So that's what debt mutual fund is. Basically, in debt mutual fund, the risk is quite more. If the company defaults, we tend to lose the money. So instead of that, people can opt for the nationalized banks or post office or something like that. Unless it is a big organization, the debt of a big organization will be safeguarded in some way. And the next point is, what are the kinds of mutual funds? Basically, there will be like small cap, mid cap, large cap. When we consider small cap, the companies that are in those small cap mutual fund will be like small companies, newly formed companies, or those companies have been there for many years but newly launched in an IPO or something. So those companies, the risk is quite high, while mid cap is something in which for number of years the company has been running, and we tend to have the uh, protection that the company will not crumble, will not default, will not suddenly close in a fortnight. While in case of large cap is basically a big organization, like for example TCS, SBI, wherein the market size, the market capitalization of that particular stock is quite high. That organization is very big, so the risk involved is very less. So according to one's interest or choice, one can invest in small cap, mid cap, or large cap. Even there are some schemes like SBI Focus scheme, in which a combination is there of small, mid, and large. So one can take such decision also to invest in such fund. Even the opportunity to invest in a global fund, we get through we get through mutual fund. So basically, when we tend to invest in global stock, for example Google or Microsoft, for an individual it is quite tedious, or unless we have a big corpus, we cannot invest in those stocks. But mutual fund gives an opportunity to invest in those companies. So we get an opportunity to have a global, portfolio. So that's what my analysis was about mutual funds. One should take a conscious decision by going through various websites and comparing various mutual funds, their returns basically. And one can go into that, like invest for, basically it's wise to invest for long duration. If short duration investment is to be done, then basically one should go for post office or bank FDs. Thank you.